Howie, talk to me a little bit about the trends that actually COVID-19 has changed. So, we're talking about the fact that this is not really a misplacement or a crisis like it was in '08. It's just accelerating trends that was already in the market. So I don't know whether that's, probably, healthcare via apps or, technologies, cybersecurity, things like that, and what role ETFs can play into spotting the trends and playing these trends.
Yeah, it's a great observation there, Francine, because what COVID-19 has been able to do is shine a spotlight into some of these newer sectors that are coming, into the forefront. Before, when we were speaking to investors or clients about cybersecurity, let's say 4 or 5 years ago, it wasn't as obvious. E-commerce was another thing that we had started talking to investors a lot about, what is happening in the e-commerce logistics sector. And of course, when lockdown happened, people started to realize and also feel real time how this was going to effectively change their life, looking at some of these tech solutions, looking at how things were going to be delivered as easily as possible. And of course, healthcare solutions being at the forefront of this. We've been talking investors about telehealth and the fact that you can actually solve a lot of problems just remotely by essentially being able to consult patients through digital means rather than clogging up the healthcare system through traditional kind of in-person meetings with doctors.
What about ESGs, Howie? How has that changed in the ETF world?
Well, I think that's definitely going to be an evolution. If you asked me this question 3 or 4 years ago, ESG was something that a lot of investors perhaps didn't really consider too much. But all of a sudden, every single meeting has an element of ESG here. And what we certainly see is that ESG is going to be integrated into all types of investment strategies. And it will kind of leave a lot of existing strategies that don't consider ESG potentially not as attractive or not as interesting to investors. As you can see in some of the numbers that come through, more and more products that are being developed are indeed focusing on at least excluding investments or stocks that are not deemed to be suitable in a portfolio. But more importantly, we're now seeing investors having the appetite to really allocate capital towards companies which are essentially scoring better or having a much more effective approach to ESG. And for us, another component within ESG investments, whether they're ETFs or traditional funds, the engagement with these companies to get them to really behave better and think more importantly about corporate governance, et cetera. Those are really kind of important developments that I think are here to stay.